All right, Connell, thank you very much. With us now to talk a little bit more about the potential pharmaceutical marriage are Fox Business contributor Charles Payne and Doug Flynn of Flynn Zito Capital Management. Good morning, guys.
Good morning.
You too. So this would get me excited because, you know, a $60 billion deal, that's not bad given the kind of environment we're in. On the other hand, Pfizer has some history with deals, and the history isn't that beautiful. So you tell me, Charles, what do you make of this possibility? I mean, Pfizer's a lot of cash. I assume they want to use it.
Well, they not just that they want to use it, they have to use it. The Lipitor is in a lot of trouble. That's their flagship drug. It comes off a patent in a couple of years anyway, but even before then, there's a lot of competition eating away at its dominance. I know you're so excited. You threw your BlackBerry. But the thing is, I kind of thought they were going to go after a pure biotech play. I really thought Amgen was maybe going to be a better fit for them. Wyeth has been in the rumor mill for years, maybe 5 years or longer. So the fact that they were acquired is not necessarily a surprise. It's not a hefty premium either.
It's interesting because Kindler, who is in charge at Pfizer, has done a lot of cost-cutting initiatives, which have done very well. But it's not reflected in the performance of the stock, and people are getting itchy. They want him to go out there and do something. Doug, is this a reasonable thought process here? Would this be a good deal?
Well, the stock has outperformed the market over the last couple of years, over the last year, but underperformed longer term. And you know, cost cutting is not really a long term. Yeah, you need to do more. And there is some biotech in the company, in the purchase, and Pfizer really has relatively nothing. So there are some synergies there, but you know, as you mentioned, there's not a good history of long-term shareholder enhancement over time with these deals, and I just don't know if you get the same value out that you used to get.
I find it interesting, Charles, because in a recessionary period, people say, okay, defensive names, and then everybody says healthcare, right. Great defensive play. And yet when you look at the list of issues that this industry is addressing right now with patent expirations, competition with generic drugs, research and development costs, which can cost 20% of the average drug that comes on the market, it appears to me as though they have so many headwinds that it's hard to sort of understand why everybody says this is the place to put your money. Is it still the place to put your money?
You know, you make a great point. Let's add to that the new administration also has been pretty adamant about holding down prices for drugs. So last year, you know, you spend $7 billion on research and development and it doesn't yield you anything. That's a big, big amount. And even when it does yield you something, eventually the generics are going to come in and take them over. So that's another reason I thought they would go for biotech. It's a lot harder to copy a biotech rather than a chemically made drug. But the bottom line is, you're right. This deal seems like you know, they need deals that are going to be accretive. I'm not sure if this will be or not. Obviously, the Warner Lambert deal and the Pharmacia deal, big time money deals didn't really work out for them or their shareholders. So the whole industry is in a tough predicament. Their business models are really tough. Do you spend billions of dollars on a product that A, that may never make it to market, and B, eventually will be compromised?
It's interesting because a lot of people say about the biotech companies that the problem is for biotechs, you don't get the instant gratification of getting a lot of money out of that acquisition because the process is still a fairly risky process to bring a drug to market. But I imagine, Doug, today that this sector is going to get a nice bid. What names should we keep an eye on? Because there's going to be all kinds of rumblings now about what Bristol Myers needs to do and who in the biotech universe looks good. Who I mean, get some action?
In biotech, at least there is some R&D going on there, and Pfizer really has been not a big player in R&D. In fact, I think they cut it. So, you know, they have to look for acquisitions, and I think the whole industry overall, all of the entire industry, to survive long term in the current environment, probably have to do some consolidating. So, I don't know that I would be individually picking. There's a lot of single stock risk with any one of those, but I would look to some of those players that have a little bit of a stronghold in the biotech area to take a look at maybe they're an acquisition target.
Yeah, I mean, you've talked about some biotech.
Yeah, I think Amgen would be #1 still at the top of the list. Bristol Myers, what you just mentioned on the drug side. You know, Gilead's been acting pretty good on the biotech side. There's going to be, I think, still going to be a lot of biotechs that are going to be acquired by large drug companies.
All right. Well, you know, talk of a deal is always a good thing.
60 billion too.
60 billion. I mean, I don't know. I mean, that would be a good way to start the year if it actually happens. It sounds like it's sketchy to see whether or not it will happen. Doug and Charles, thanks so much, guys. All right, coming up, John Thane is out at Bank of America amidst a wave of controversial decisions, including spending nearly $2,000 on a waste paper basket. So just what exactly is going on at B of A, we're going to find out next. And later, it's official. President Obama, he's going to have a BlackBerry, but it's not like yours. We're going to tell you about that in just a moment.